It's Thursday, June 10th, 2010. Welcome to freetradingvideos.com. D7 here. Woohoo! Huge day with a capital H. Dow up 2.76%, recapturing the 10,000 mark. The S&P up nearly 3%, 2.8% on the Nas. The Russell's over 3%. The VIX dropping 9.5%, right at 30. Like to have seen that go sub 30. After hours market still trading quite strong. Look at this. Let's blow this up. Boom! Massive pop. Smacking our head on this little red line that we have drawn for some time based off of those bodies to bodies, those swings. We come here, we do a tag of it, and then we smack it. Really good here on Thursday with the following 20-day moving average coming down that could be acting as resistance. And for all of you who said inverted hammer, you are correct. Inverted hammers are bullish formations, and so are bullish haramis. And we had two bullish formations together. Of course, we had a better chance of going up than going down, and sure enough, we get just that. The euro did really well, and there's some news out there that helped spawn some bullish behavior out there in the markets, but you can't argue with technicals. Everyone wants to come up with a reason why something pops up or drops, and to be quite frank, I've been doing this long enough to know that it's just not by accident. It's not just news related. Technicals hold a lot of weight. What we have now officially is what's called a falling wedge. A falling wedge formation is more bullish than it is bearish, and this can serve as a trend reversal. We are at a crucial point. We can find some resistance here, and we can drop at this point. And if we do drop, I see us coming down, hitting this support line, coming back up, giving us something that most would consider a double bottom type formation, and then a breakout should occur at that point. The breakout, if it's going to happen, has a really good fighting chance. Look at this. If we come down here to the MACD histogram, big positive tick. We were a little wishy-washy last couple days, but the 5, 9, and 2 filters giving us a bullish divergence, and it's still in play. So, is this our big low that we're waiting on? Perhaps. Let's see what happens. I can tell you this, my bullish positions that I was putting on down here are faring really well. And I did hedge myself huge. I wanted to be as much as hedged as humanly possible, because guess what comes out pre-market tomorrow? Got to pay attention to this economic news that gets released. And pre-market retail sales is coming out. That is a market mover. So I don't know what that's going to do, but it can act as a catalyst, sending the markets up or down. Since I don't know what that's going to be, I need to be hedged going into that, and I am just that. Now, what can we expect? What we can expect is simply this red line acting as resistance. Doesn't mean that we can't pop through it, but if we close down below it, that will still be serving itself as resistance on this. The other thing that we can expect is we need to have this break at some point and fairly soon. I think it's going to break on this leg or the next attempt going down. I see that possibly being a failure, and then the break will take place. So any way you look at it, I see this 1050 area down just a little further, the 1040 area being a nice support area for us to rise up on. Now on the bigger picture, this is what I foresee. We have a left shoulder, we have head, and then we're going to make our right shoulder. I think a great place for that right shoulder could be this 1150 area. If we hit this 1150 area and then drop, we're in significant trouble, especially if the neckline is pierced. And that means we'd have to hit 1150 and then cross back down through 1050. If that were to happen, we're in for another nice significant downdraft in the markets. But until that time, I'm looking pretty bullish at this moment, but we'll call it like we see it. And for all those that signed up for the hedging or webinar tonight, Dr. Jonathan will be presenting 4 free trading videos. Looking forward to that. So take care and safe trading to each and every one of you.